Hello, guys. So this is the pre-market analysis of 10th of April. So two important things that we need to discuss. One is related to TCS result. So there is going to be a big impact on IT. Not only TCS result, there is something else also which we have seen yesterday globally. Also, IT sector have fallen, right? Software stocks have fallen. So we, apart from that, we also need to quickly discuss geopolitics. Oil is again back to almost 100, which is a psychological level. So let's start with TCS result. We have discussed already yesterday that the Bloomberg expectation, that's around 27% quarter on quarter, but the actual is 29%. So when you look at it, expectation is less and actual is more, which means really good, right? It looks very strong. But the reality is that if you see Q3 quarter, there was a 2,150 crore profit impact is there. That is because of the labor issue. So this is something like a normalization, and we cannot consider this as a real strong growth. And if you see the revenue, its expectation was 3% quarter on quarter, but actual is 5.5, which is almost double. So the total revenue is 70,700. This is a big positive that is beating the expectation. And this looks good on the paper, right? But if you look at this in dollar terms, you can see a degrowth in terms of dollar that is almost 0.5%. So again, if you see, that is not good. In terms of rupee, it looks good, but in terms of dollar, if you see, there is a degrowth is what you can see, right, in dollar terms. And there is a, if you see constant currency, again, degrowth, that is minus 2.4%. What does that indicate is the weak global demand, okay? Apart from that, if you look at EBIT and other margins, that is looking good. So it is good and stable, and that's also beating the estimate. So major positive other than this is looking positive, but that's not great. But the major positive is there are some deals, right? Quarterly deal is there for 12 billion. If you look at the order book and then full year, almost 40.7 billion deals. These are major positive. And apart from that, some of the partnerships like TCS is working with OpenAI, NVIDIA, and Anthropic also. And this AI revenue is again, you can see almost 2.3 billion annualized revenues there. So that's something which is positive. But the major concern here is this dollar revenue degrowth and the global demand weakness. That's very important concern or negative. Then one more, the dividend expectation, right? It was almost 40 per share, but what actually declared is 31 per share. That is also disappointing, right? And attrition have increased to 13.7. So finally, what I want to talk about this TCS result is, though it looks positive on the paper, but it is actually mixed. You can see positives, the strong profit, revenues beating the expectation, strong order book, and growth in the AI area, right? But the negatives, if you see this dollar growth, weak dollar growth, and then low dividend and the attrition increase, right? And the degrowth that I've discussed, the global demand weakness, all these are looking negative. Apart from that, there is, IT stocks generally, if you take today, except Wipro, your TCS is already a mixed result, and then Anthropic have launched new AI model, and because of that itself, we have seen before what happened when Anthropic came with this AI model. So US IT stocks have fallen 2 to 3% yesterday, and Indian stocks listed in US market also have fallen, except Wipro. Wipro, there was a different reason. There was a news related to share buyback. That decision will come on April 16. So Wipro did not fall much, but rest of the IT stocks have fallen. Technology or the software related stocks in US market have fallen 2 to 3%. Now, coming to geopolitical situation, ceasefire is there. Because of that, we have seen a big gap up. And yesterday, there was some fragility, there is some confusion. So we have seen some kind of dips also. Still, it looks fragile because Israel is attacking Lebanon, and Iran is considering Iran and its allies are part of the deal. But Israel is making clear that it is only Iran and not Lebanon or Hezbollah. So Trump was also, given the warning that Iran will face painful outcome if this deal is rejected. So because of that itself, US market have seen a gap down, but then there was some counter development, right? Israel agreed to start talks with Lebanon. So as a result, again, when the US markets have given a gap down opening, but then it recovered, and closing basis, if you see, Dow Jones have closed almost 0.5, S&P 0.6, and Nasdaq 0.8% up. Apart from that, volatility index, if you see, it have fallen. Now it fell below 20. I think after the war, this is the first time it is coming below 20. We have seen it is going to 30 levels also. So this is a very good positive signal. And GIFT Nifty actually indicating around 80-point gap up opening as of now when I'm doing this video. It is trading at 23,980 levels. So it's a close to 80-point gap up opening. Now, Coming to oil, that risk is coming again, right? Saudi Arabia, there's a new trigger. Saudi Arabia is actually cutting the production 6 lakh barrel per day production to this level. So because of that itself, again, might have acted as a trigger. Crude oil prices increasing. WTI is now 99. Yesterday it was trading at around 96, 97. Brent is 96.5. That US oil premium, you can see slightly coming up. Now, again, this is 99, which is moving towards 100 level, which is a very critical level, psychological level. Anything above 100, that is strong negative for the market. Anything below 100, market is stable as of now at the present situation. Coming to FII data, yesterday also FII sold for 1,700 crore, right? And it's almost 30 continuous sessions they are selling. DIIs bought for 950 crore. If you look at open interest, call additions are at 22% at a higher level, put addition 7.5. Because of that itself, calls are more, puts are less. Addition, the PCR have dropped to 0.94 from 1.07, which is turning slightly bearish. So there is a bearish bias now. Participant wise positioning also, if you see, retailers are 17% bullish, FIIs are 14% bearish, and prop traders are slightly bearish, 2% bearish. And market as of now is mixed. Positives are US market have turned positive after the gap down after the news. Israel is ready for a talk with Lebanon. That is positive. And the ceasefire is also existing, right? And VIX is coming below 20 in US market. That's also good. Now we are looking for a gap up. That is also looking positive. But still negativity is there. IT weakness is negative. IT can drag. Oil is nearing 100. That is another negative. This ceasefire, this is completely fragile. We don't know what anytime can happen, right? So today, the market will be driven again by TCS impact. The IT reaction will be there, except Wipro and the oil movement. So technically also, if you see yesterday, market opened 90-point gap down and then, closed at around 23,780. So from 24,000, 20, 40, 50 level, it is almost, we got a 300-point dip from that high. So you saw a big bearish candle. It could be a kind of consolidation after the rally. It's not a, big negative. It's expected after 1,000-point rally, not even, 25% you got the dip. So that's perfectly fine. So still, it is above 20 MA. That is again looking good. RSI is 51, slightly declining compared to last day, but it's still looking good compared to previous days. Important resistance level is 24,000. That's where even I've also positioned my calls, and then breakout we can expect about 24,000. It can move to 24,200, 24,300 level. Immediate support is at 23,500, right? So again, Bank Nifty yesterday 200-point gap down and closed at around 54,820. That's again a bearish candle. It could be profit booking because you got such a big move, right? And then structure, if you see, it's above the short-term moving averages, but below the long-term moving averages. RSI slightly declined. If you look at the levels, resistance 55,300, 55,400 level, support 54,500, 400 level. So open interest again, if you see, maximum is now at 24,500. So we are looking for a range of 23,500 to 24,500 now. So 24,500, after that 24,000, majority of the risky players have taken at 24,000 only. Fresh writing I can see at 23,900 also, when yesterday they broke the 23,800 level. So 24,000, 23,900, 24,500. Put side, if you see, maximum at 23,000, but 23,500 is more valid. 23,500, 23,800 also there, because market closed at 23,800 level yesterday. Those are risky players. That could be straddles. So 23,000, 23,200, 23,700, 23,500, but consider that 23,500. So the larger range that we are looking for is 23,500 to 24,500. A shorter range for maybe another trigger is coming. Till then, 23,500 to 24,000 market may consolidate. 24,000 is the previous high yesterday that we got big gap up, and 23,500 could be a range that we can look for. So overall, you see, TCS result is looking good, but not that great. It's mixed, and IT sector will be under pressure because of the other development also. And oil is nearing 100, which is a critical risk. And market already now entered into a kind of consolidation phase. It can consolidate between 23,500 to 24,000. You may get quick scalping opportunities. So, market is transitioning from that rally which you got, right? For, I think 2,000-point rally which you got from 22,200 low to 24,100 almost it came. So 2,000-point rally, 4 days we got. Now it is consolidation. So be very careful. Finally, focus on the oil movement, IT sector reaction, and 24,000 breakout levels. So if you would like to trade with us in the live market, and we have the live market mentoring program, get in touch with us. See you there.